in essence, if you, and I believe, and I've said this to many a time, I think Bitcoin's going to go up about 30% a year for the next 20 years. So if you have a long time horizon, you shouldn't take the 10%. You should take the 30%. But you have to have the stomach for the volatility, and most people don't want 30% with 30 vol. They want 10% with 10 vol or less vol. So we distill the yield, and then the last thing we do is we compress the duration. Your 5-year-old has to wait 30 years to get rich. That's difficult. Your 5-year-old gets money now forever. That's instant gratification. We're converting 120 months or 240 months of duration. A 30-year bond has 240 months of duration if you're an interest investor. We're stripping it down to 1 month. Pay me now. And so the way you do that is with a huge pool of equity capital. We have $60 to $70 billion of equity capital a day, and then you embed the credit instrument into the equity capital. And that's what allows us to build this digital credit. And I'm going to talk about digital credit and digital equity, but with inside. When gold was money, and gold was the commodity store of value in the world, the killer app for gold, it wasn't the gold. Cash settlement meant I moved gold from here to there. The killer app of gold was credit. The Rothschilds created gold-backed credit. The banks created credit. All currency was credit. All sovereign debt was credit. All corporate debt was gold-backed credit. All consumer debt was gold-backed credit. All mortgages were gold-backed credit. It used to be the world for hundreds of years ran on gold-backed credit. If we have digital gold, it's very logical that the world's going to run on digital gold-backed credit, or digital credit, if you will. And how do we get it? Well, if we've got an asset that outperforms the S&P index, we just strip off the amount of yield you want, and then the excess yield goes to the common stock shareholders. So the first digital credit instrument we created was STRK. We created it as a preferred stock. We pay an 8% dividend forever, and we give a conversion rate into the common shares forever. 100-year call option, 100-year bond. We took it public, and we put a shelf registration on it. So the innovations were preferred stock as credit, a public instrument, a happy name, strike. Sorry, Jack Mallers. I like the name. So I took it. But you can still have it. STRK. And then we also backed it with digital capital, Bitcoin. And because it's perpetual, we can sell the instrument in the market any given day. So it's like taking the best ideas from an ETF and adding them to the best idea of a bond, the best idea of common equity, and putting digital behind it. And then after we did that, we thought, why don't we create a perpetual bond that pays 10% dividend yield forever? And we did that with Strife, STRF. You would never pay 10% in a bond to build a house or to build a data center because it's not going to last 100 years. How do you actually pay someone for 100 years? You have to have a use of proceeds that will last 100 years. So we borrow the money forever, and then we invest the money in Bitcoin forever. We're basically funding we're investing in the digital asset economy forever with money we borrowed forever. We're matching the duration. Because that's a senior instrument and traded way above par, and the effective yield is 9%. And the idea is that's 9%, and investment grade bond is 4%. We had to pay a higher rate because we never intended to pay the money back. Right? We're not giving you the money back in 5 years, we're giving you the money back in 5 million years. An investor would say, pay me more. And first we thought that was a bug. Oh, we have to pay more. And then we realized that's a feature. Because I would rather pay 10% forever than 5% for 5 years. If you do the math in your head, if you got to repay the principal in 5 years, that's 20% a year plus 5, that's 25% financing versus 10. So if we'd rather pay 10%, who would rather collect 10%? The credit investor. So we created the best credit. The credit became the product that's traded up. And after we did it, we thought, how can we pay people more? Because Bitcoin is going up more than 9% a year. Bitcoin's going up 29% a year. So how do you actually create a perpetual swap and pay somebody more than that forever without credit? And the way you do it is you do it with a non-cumulative junior and preferred stock. We created the same version of the stock of Strife, but we stripped away the cumulative right and the governance provision, and it trades below par at 80. And that means that the effective yield is 12.5%. So there's a 3.5% credit spread between the senior instrument and the junior one. And what that means is, if you don't trust anybody in the